Interesting chart by Mike Santoli. Good morning. I know I'm live. I'm going to turn this down. Let's see. We'll turn on our live. Hit that thumbs up button. How'd your recommendations do today? Live chat. I'm going to put this on. I got Santoli on. He's going over Meta versus Alphabet. Interesting look. And let's go over here. This is one I found. SQL. It is up 143%. Crazy. SQL. It closed at 84 cents. What is SQL? Let me go in and see what SQL is. SQL. SQL. Healthcare. Crotto with the FBI announces Crotto with the FBI. I mean, this must be what's driving the move. A technology company providing life sciences instrument and research today announced the establishment of a 2-year cooperative research and development agreement with the U.S. Department of Justice, FBI, under this CRADA. SQL and FBI divisions will seek to evaluate and determine the forensic capabilities of direct RNA sequencing. Interesting. It is crazy. Just so you know, I was in FinViz. So if you're new here, I use TrendSpider to do my charting. I use FinViz for all of the fundamentals. I use investing.com to look at the movers. So you got Hillstream Biopharma, which is up 77%. You got Aconda Corporation, Hexo Corporation, which is up 10%. You only have these 3 that are really up as far as most active stocks that are moving. But, I mean, we can look at them in here, but they typically won't move. This is TrendSpider. This is my charting program that I use. The link is in the description. If you use code DSP25, you get 25% off. And I use this to scan for stocks. Morning, Sherry. Sherry, SQL, this one's right up your alley. SQL's a little, I gotta move. Let me look real quick because I think it put in an extra candle for some reason. Mike Santoli was just doing an interesting look at Meta versus Google. Super interesting. I'm moving SQL over so I can watch it. My guess, and it's just a guess, is that you will see this pop on open. Here's the crazy part. Let's look at, hold on, where is SQL has float. 7.52 million shares floated. And so far this morning, you've traded 14 million shares. It's an interesting, I mean, it's news, but it's up, 140%. This little icon here is it was getting delisted, and all of a sudden they make an announcement, and boom, they're at $2. So, interesting one. Let me do some scans here. I'm going to go to the market scanner. I do have a lot to go over, by the way, which kind of pains me because on a Friday I hate going over a lot. But we'll look at scans, but I may Goldman Sachs. Okay. Boeing. Boeing had a cross up. Boy, that's interesting. I thought they were going to go down to this 191 level. It's not a super strong cross up. I'm not going to put it in. You know what? That's in our core portfolio. Boeing. Not a super strong cross up, but cross up. Anyway, let's look in nothing in the brokerage holdings in my personal one. Let's look at energy names. Anything on the energy sector? No. Levered ETFs? No. Low cost Vanguard? No. Spider sectors? No. My personal watch list, HLT, Hilton, crossed up after earnings. Wow, it's a strong move. I'll put it in there. HLT. It's too strong for me to get into, but interesting that it did move that much. Let's go to ARC Holdings, and I'm sure there's some in the ARC Holdings. Unity crossed up, but that's because they had a huge move. It was a secondary cross up. Sorry, but with this one, I mean, I just don't see it staying over the 200-day for very long. And I see that gap kind of down there, so I can't recommend it on a Friday, even though it's down. It had a big move yesterday. PTC Inc. That chart's too strong. Hey, no. Hold on. I'm gonna get your bed. Hold on. We're gonna get your bed so you two are quiet. Come on. I'm gonna get the bed. Okay. Here we go. Come on. I know you want to come in here. There you go. Want to go under? There you go. Good girl. You are the catalyst for all of those noises that come out of the two of you. So, okay, ARC Holdings. Those are the only two. We'll go to the S&P, or I'm sorry, the Dow 30 is next. Boeing, we already have. In a down market, you just don't get a lot. I mean, for the month of January, I know you guys were used to a long list. Yeah, if it loses 200, I think you're going down to that gap. But remember, there's a gap. There's as strong a magnet on the gap up as there is on the way down. And I'll look at Tesla. I'll add it in there. But I heard a great strategy last night. And it's a strategy that I've used in the past. But if you get to 100% gain and you've doubled your money, take half of it off, because that just preserves your capital. And yeah, it might continue to go up there, but on any kind of move back, it just makes sense. EQT, another cross up. Oh, I'm sorry. EQT has the cross up. We'll put in EQT. Coterra. This one's an interesting one. They're making money. Hold on, let's look. CTRA. P's 4, dividends 10%. Wow. Downgrade Raymond James, outperformed the market perform. The latest price targets are 28 to 41 to 29, and it's trading at 24. Analysts tear up predictions for natural gas. This is going to put me into a paywall, I think. Now, I need, and I don't know how to get around the paywall, but you know what? What was that chart? Hold on. Live coverage concluded. Yeah, look at natural gas. I mean, those natural gas futures, yeah, they're coming up, but Coterra. We'll put it in. It's in CTRA. VOC. What's VOC? VOC Energy Trust. This is an interesting one because it's been hovering above that 200-day and a strong move down with a low RSI. What is VOC? Is this natural gas as well? My guess is it's natural gas. But energy, oil, and gas holds term net profits, interest of net proceeds from production and sale of interest in oil and natural gas, properties. So it's got a mix of both. The company has 80% term net profits interest in the net proceeds of underlying properties. So it's got significantly less natural gas than it does oil. Is my earnings turned on? Yeah, earnings is turned on. I guess they don't announce earnings. I'll add it, Sherry. Is this a hype play, Sherry? RGTI. Rigetti Computing. I added it in there for Sherry. I'll look at it. It's an interesting chart for sure. It's got the button hook, but you've got a pretty big volume spike. Grocery money. I'll look at it. VOC's interesting. Why don't they have earnings? I mean, they have no coverage whatsoever. Quarterly distributions. Let's see. Receive a distribution amounting to or 23 cents per unit and payable February 14th. 23 cents on, let's see. What's 23 divided by point? No. What's 8 divided by 0.23?
The answer is
no. What's 0.23 divided by 8?
The answer is 0.
So it's a 2% dividend coming up on February what? January 30th. You had to hold. That may be why you're seeing after January 30, boom, because they had the dividend X date right here of 2%. It is interesting because their dividend is 15%. Year to date, they're down 21%. We'll put this one in. Out on Jan 30. Let me see. Okay, what's next? VOC, MVO. I don't like this one. I've seen this one before. I just don't like it. Even though I do think you probably could go from this 13 to 15. I have a 15% dividend too. It's hard to turn this one up because hard to turn this one down. Net profits in oil and natural gas. In the Midwest, Kansas, the company was incorporated. I mean, this is the same thing. It's just a trust. It's down 15%. Kind of the same. You know what? MVO is similar. Cross up as well. So there we go. And there's one more EQT. EQT had a cross up yesterday afternoon. So EQT will bring up as stated yesterday. Okay. Bum, 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 bum. I go back to the strategy tester. Let me look at RGTI over here. Why did they pump? They aren't making money. Downgraded. They do have a price target last time from November of $2. Announces updated strategic plan to prioritize achieving higher performance systems and potential path to narrow quantum advantage. Let's look at Insider Monkey. They sometimes describe the companies pretty well. RGTI is an American computer hardware firm headquartered in Berkeley. The firm is one of the companies that builds supercomputer. Ooh. Insider Monkey studied 920 hedge funds to discover that 16 had held a stake in Rigetti. Rigetti, biggest investor is Ben Levine, Andrews, which owns 1.3 million. They don't give a lot of details. It's just, hey, quantum computing, which kind of scares me because I just don't know anything about them. But hype play. Shit, you use that term, quantum computing. Okay. Let's see. Okay, I'm going to start the podcast here. I am going to put, what am I going to put on my Active Trader Pro? GNS is falling. What's Google at? Google's creeping up, $96. Meta, I think Meta was losing last time I looked. Yeah, 176. Oh, let's start this podcast. Let's start this puppy at 9 o'clock. I got to do my notes from this week's scans Monday. Recap. Tuesday was and I'll keep Thursday off. Tuesday, Wednesday, and that'll be it. Wow, but I had tons of scans on Wednesday. Okay. Boom, boom, boom. Good morning. It's Friday, February 10th, and yes, I'm doing this in the morning. I had an afternoon show yesterday because I went hiking. So hopefully you listened to that one. I kind of went over, hey, don't listen to a douche on the internet like me. Do your own thing. I did get a lot of people. It's been a down week. So I did get a lot of people basically saying, hey, I listened to this person, blah, 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 and I bought, and I'm down. Should I just wait and hold on? Well, buying and holding is not a strategy. So, but I do have a lot to go over. So I wanted to start it out with, I watched Ricky Gonzalez, I think his name is, last night, and it was interesting in that he said he lost $5,000 yesterday, in going into TQQQ thinking that we would have a rebound. And he missed the SQQQ burst yesterday. And it was kind of clear SQQQ had all of the momentum yesterday. And I'm going to go into Active Trader Pro, and I'm going to show you SQQQ yesterday. And these are 5-minute candles. And you can clearly see from the start of the day, it had confirmation the entire day. I believe this was the portion where he went into TQQQ. It never really got significantly under that 9-day. And even after hours, it's continued to go up. But right now, you have SQQQ pointing down. So he went and basically said, hey, let's look at this. So he lost $5,000 on the move. He was honest about it. He trades live. He charges you a $500 fee to watch him trade live. He's got some pretty solid knowledge. He's got more balls than I do about going in. But let's go back to TrendSpider. And in order to figure out, should you go into SQQQ or TQQQ, you want to look at the Qs. This is the basis for where should you go if you want long-term. If you want short-term, trade on those 5-minute charts. Trade on those 1-minute charts. If you want long-term, like a swing trade, and I don't suggest you hold these over the weekend. I always say this with these triple levered ones. Always make sure that you have tight controls. And sorry, if you're holding over the weekend, you can't sell on a weekend. You can't buy on a weekend either. It's better off just to buy on a Monday. Patience has made people save money because you don't know what's going to go on over the weekend. But here's QQQQ. Here's our 4-hour algorithm. And you can see I always talk about a button hook. Well, in the Qs, you're seeing a pretty good button hook up here. So where would I be? I'd probably be in SQQQQ, but it's a Friday. Your RSI is at 55. You're coming off of oversold territory. When you got up here, and this was February 2nd, and the triple Qs, it went up to 313. And you're seeing it down at 301 right now. Well, it kind of makes sense that the MACD's up there. Just technically, probably makes sense to buy some SQQQQ. Just because we've run so much. Doesn't mean that you're always going to win. Again, make sure that your controls are tight. This is for the first time in a while. It looks like the 200-day is actually turning positive. It's slightly positive, not huge, but slightly positive. So in my mind, when you go with if you want to know which one should you do you buy, TQQQ or SQQQ, look at the same chart as QQQ. Where does it say that it's going? That's essentially what it is. Where does it say that it's going? And then pick your side. And you can use our 65-minute algorithm on TrendSpider. If you have TrendSpider, you can look at the Qs on a 65-minute. And if it has you out, by SQQQ. If it has you in, by QQQ. Hold on one second. Okay. I got a sick puppy. What's wrong? You have to go out? Okay. 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 Here we go. Hey, let me get my shoes. Sorry about that. I have got a sick puppy who has some poo issues. And when I went on my hike yesterday, well, I'll explain it. I am sorry about that. I yelled, hold on, because I had a dog crying. I've got a sick puppy who, when I went on my hike yesterday, had a little bit of problems when I came home. So, just bowel issues. Anybody that has a dog knows what I'm talking about. So, here is, where was I? I was on QQQs. So, find the QQQs, blah, blah, blah. Let me get back to my notes real quick. I'm going to start out. I'm just going top to bottom. Brian asked me on YouTube, American Airlines. He bought in, and I don't have the comment in front of me. Let me see if I can pull it up. Let's see. I bought 8 shares of American Airlines at $10.81 during the close down of the pandemic. American Airlines does not have a dividend. Is it worth holding on to? So he bought at $10.81. Let's go back to TrendSpider. Here's our, I'm going to go into the 4-hour algorithm. Since it's a long-term hold, it does make sense to look at it because you do have, wow. He bought AA. It's not even American Airlines. It is Alcoa. This is the aluminum. Let's go back to the weekly at $10. I'm not going to go to a daily. I'm going to go to a weekly. This is an amazing trade. A+ on the trade. You've 5 times your money. So here's my thought on this one. And this is a long-term chart. If we go back, this is all the way back. It's an aluminum company, Alcoa. You go into FinViz, you look at AA, and you can see the 52-week is the high is 98. The 52-week low is 49. And you've seen this slide in this stock. I see January B. Riley says it's a $42 price target. Morgan Stanley says it's a $56 price target. October 7th, UBS initiates with a $43 price target. Honest to God, I don't know this space very well. It's only got a 0.8% dividend. It's up 10% year to date. From a long-term standpoint, I would say you still are above that 9-day. And if you're holding on, hoping that you get above this 50-day, with the last time it was over its 50-day was May of last year. This has probably got to do with most of the commodity slide that we saw. When you saw this run up here, this was Ukraine, and commodities and materials just shot up. And now you're seeing the regular kind of back here. So this is 2020. This is COVID. This is where you're at regularly. I mean, pre-COVID, that's where you're at regularly. Inflation, yearly improvements, blah, 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 takes you up to this price. I don't know that it necessarily makes sense to hold on and wait for it to go back to 100. If you go to our 4-hour chart, I always like to sell when the 4-hour kind of tells me to get out. And here you go. I mean, you just got out of a 14% run on this one. Year to date, again, you're up, 10%? Yeah, 9.98%. I'd probably trim it. You 5 times your money. So I would at least take out your initial investment. The dollar amount of your initial investment. That would be my thing, is take out your initial investment, dollar amount investment. You won't have to pay taxes on it. But if you do take out the rest, that's when you'll have to pay taxes. It's long-term capital gain. So I would say, I would not assume that you're going back to 100. I'd assume that probably, your tops on this one, you may go back to 60 or 70. I don't see any analysts that say it's going back up there. You can take a look at the insider action that you see. They're selling at about 53. And these are the EVP CFO. It's not huge dollar amounts. I mean, the last big dollar amount was January 7th at 53, $7 million. Another guy sold $2 million. You can see a sale here at 75. So I don't know that they necessarily have huge positive thoughts that it's going to stay and go above. But when you see sales like that and you see kind of this chart, I'd say take it off. Travis wants me to look at, I think this is a hype play, IQIYT. Is that what it is? LQIYT. Hold on. LQ. Is it LQ? IYT. No. IQ. Somebody's gonna have IQ. I don't see it at all. Let me see. Did I mistype this? Did this type IQ? Oh, I guess it's IQ is the symbol. Because it's IQIYI. That's the name of the company. IQ is the thing. It is a communication service, internet content and information. They do, I think, online entertainment services. IQ is the symbol. Sorry for that. IQ is the symbol. Let's go back to the charts and look at IQ. IQIYI is the company name. This one has, 4 hour. We just got out of an 89% gain on this one from November 30th. And you sold on January 19th, and you got back in at 639. Let's look at it's not making money. Forward PE is 42. Price to sales is 1.57, so it's not crazy like a lot of these. Morgan Stanley on January 19th, they moved their price target to $5.10, and you are well over that. On September 27th, JP Morgan set a $7 price target. You are under that one. Well, no, sorry. It's at 737 right now. I think this is hype play. It's a Chinese company. And I think now I remember my comment on this. First is it's run up so much. So that's the first thing to be careful of. Second thing to be careful of is it's Chinese stock. And third thing is you can just see the movement in this. And it's already run up so much. So be careful. From what I see, they're not making money. The price targets from the monkeys, which are recent, you've already exceeded. From a volume standpoint, I don't see anything that tells me the volume is crazy. I do see the RSI at 64. I see if you wanted to trade this one today and get on our 65-minute candles, I don't think you're nuts. But I do kind of see the pre-market, it's at 733, so it's down 3%. You're in at 762, so it's probably going to get you out from 1,000 candles on this one. Let's just do and again, 1,000 candles is about 6 months. If you were to just buy and hold this stock on 1,000 candles, you'd make 88%. Our algorithm loses you 33%. You only win 29% of the time. Your average win is 6.38%. Now, that doesn't include, you see 35% on a, December 29th, you buy in at $4. You get out on January 6th at $10.35 with a 35% gain. So there are big wins in this. I'd say play it on the hype. If you look at a 4-hour chart on this one, I just don't see any reason for me to say, yeah, this is one you can invest in. When the monkeys have already had their price target gone by, there's no insider sales point. Their revenue, they've got really good revenue. They've got a good float. Shares floated 417 million. Short interest is 33 million. The average target price is $5.29. You're 361% above your 52-week low. 788. You're 3% off your 52-week high. Why are you putting your money into something that's at its 52-week high? That would be my guess. But Travis, there you go. Tom wanted me to look at STLA, which is Stellantis, which came out with a Ram EV yesterday. They announced their Ram EV. And And I wanted to read this to you. It's not my opinion, but I just so happen to subscribe to EV newsletters, and I wanted to read you this one. Ram released news of their new EV pickup. Here's the take of a leading EV newsletter that I subscribe to. That's my note. Ram and Stellantis are certainly not leading in the electric revolution. They said they were, but in their press release, they're not. By the time this thing hits the market, meaning the Ram EV, Ford is already going to be close to releasing the second generation of the F-150 Lightning. There are going to be 3 or 4 other electric pickups available from other brands. Now, it doesn't mean that Ram will be completely left behind, but it basically needs to hit it out of the park on its first try, which is not easy. I'm extremely skeptical, and this is the newsletter guy saying this. I'm extremely skeptical, but maybe we get a surprise on Sunday with specs and pricing that will indeed push past the competition. Personally, I doubt it. That's his take on it. It gapped up just on the EV announcement, kind of like you see this happen. Stellantis, STLA, the algorithm has you in at 1579. You've got this gap up here. I probably wouldn't buy into this gap. Your RSI is at 66. The MACD is super high. I don't know that I'd buy into the hype. Don't think it's a bad play. If we look at a weekly of this one, you can kind of see it's above the 200-day. It doesn't stay above that 200-day post COVID. It doesn't stay above that 200-day very long. It doesn't stay below the 200-day. But I would feel more comfortable in the $13 range unless, like the EV guy says, the newsletter guy says, unless they hit it out of the park. If they hit it out of the park, again, with pricing and stuff like that, you could see a pop in this one. But over 1,000 candles, which on this algorithm, it's 4 hours, which is about 2 years. 1,000 candles, it's about 500 trading days, so it's almost 2 years. You would buy, if you bought and held this stock, you'd make 4%. The algorithm makes you 1.9%. You win 48% of the time, so it's about 50-50 when you win. Your average win is 5%. Probably better off taking the Chiefs. Unless you have some type of love for Ram trucks. And if you think Ram trucks, I heard a great, I was reading the same EV newsletter last night, and they were talking about Ford versus Cybertrucks. And Ford F1 Lightning, and they do have a history. And if you know this, if you know Ford trucks, the typical Ford user, it's generational buys. Generational, my daddy bought a Ford truck, his daddy bought a Ford truck. So it's generational. So there was some questions whether the Cybertruck would win or not. But Tom, that's not one that I would say, hey, you got a huge opportunity there. But it's been a hype play. So if they hit it out of the park this week, I think that's one that could bump up. I just probably would. Again, it's a weekend. Why buy it now? Lyft reported earnings, and I wrote down any reaction is an overreaction in this market. This one's gapping down all the way to about $10. It's at $11.19 in pre-market. This thing closed at $16.23. I had mentioned it yesterday. They lost 76 cents per share. They went from making a profit to actually losing money. Super poor guidance. I saw Brad Geisler, I forget his name. They're getting their ass handed to them by Uber. And Brad basically said, hey, listen, there's going to be a one-win thing on this. Lyft is mainly focused in North America. Uber is worldwide. Uber has freight. They have food. They have significantly more chains than Lyft does. And Lyft is having a problem getting drivers and importing, making sure that drivers are happy. So they could get their ass handed to them. Here's what you're seeing. You saw this buy-in at $10.71, and I said it yesterday. We were seeing the button hook, and if you were in Lyft, get out of Lyft. You just saw it lose its confirmation. I thought that with Uber doing well, this one could do really well. I was wrong on that one. So interesting one, but I have Uber in our core portfolio. So on a good entrance, you get into Uber, I think. Not right now. I think Uber just got hyped up on those earnings, and I think they're moving up. We had a cross up here yesterday that I missed because I did an afternoon show, not a morning show. UNH, 485.63. I am in this at 485. I will probably add more. Last night, it was one of the traders' final trades, and he said it's just too cheap. And I agree. Anywhere under 500 on this one, I think you're fine. I think you're starting to see the move that we're moving out of these high fly runners and healthcare. If you just look at, if we go to cnbc.com and I will look at XLV, I think is the healthcare. Is it XLV? Yes, XLV. So I will look at XLV, and you can do this too because CNBC is free. So you look at the XLV, and God, I hate CNBC is just we're going to do a 1 month comparison, and we're going to do XLV versus ARKK because ARKK does represent the high flying movers. Look at ARKK. You're seeing it move down here after the February kind of time frame. February 2nd was its high, and it's kind of moved down. I think you're going to start to see the healthcare, which is flat 2% over 1 month. It's a flat minus 2%. I think you're going to see these converge a little bit. Just my take on it. I could be wrong, but I do think UNH is good for that one. I'm going to shrink this up. Coin had a big move down, and I was watching Gary Gensler on CNBC this morning about his attack on let me see, what was it? Gary Gensler looking at cracking down on crypto staking, which basically crypto staking, if you don't know, it's interest payments like a savings account. So if you move your Bitcoin to a certain brokerage, then they give you huge amounts of interest. There was like 20% interest if you just park your Bitcoin at FTX or something like that. But he cracked down on Kraken. And you're seeing crypto move because when regulation starts to come in, there's some scare tactics, blah, blah, blah. Coin had a big move down, and you're not out because some of these move, and then this is the 4-hour algorithm. You're not out yet, but you're clearly seeing that button hook right here. My guess is we pull back to this volume shelf of 40. You're at 59 right now. I do think that 40 is probably in the cards. You'd have to cross the 200-day, but it's been shown the 200-day doesn't provide a whole hell of a lot of support in recent times, all the way back to August. It just doesn't. There's not a lot of support once it gets over that 200-day. It spent almost all of last year, the first half of last year, under the 200-day. And this is Coinbase. I don't have a fear of investing in Coinbase. I don't think you're going to zero. I do think that there's always risk in crypto. But coin, I think you can put this one on a watch list. And I think if it gets into the 4 handles, I think you start buying. Just my take on it. I do think that crypto has a place. And I do think when you start to see a stall in the interest rates, I think you'll see this one move up. I talked about Ricky and SQQQQQ. Charlie from Zip Trader U last night talked about 6 AI plays. And we've gone over them, but I will put them here. GFGI, I think it was one. GFAI, Guard Force. This is one. What am I hearing crying for? What's wrong? You want to go under? Is this what you want? Oh, my dog, that's got the poop problems. She cries because she can't get under her blanket. But, Larry, send me your email address. If you didn't get my algo, just send me your email address. I'll make sure that you're on my program. Send it to me on Twitter, Instagram, Facebook, whatever. Don't put it in the chat because I won't get it in this chat. But contact me somewhere, and I'll make sure that you get the algorithm. Last thing I want to do is sell apparel, but maybe I'll do a program. I can always do a print shop where it just prints some stuff. Charge you $40 for a t-shirt, and they give me $5. Okay, let me press play and record again. Sorry, my dog again was crying. Thought she wanted something. She just wanted the blanket thrown over her. You guys with kids understand exactly what I'm going through, but those with dogs can sympathize as well. GFAI is one. He believes this one went from 11 cents to 77 cents, and it's just flying. SOUN, testing a bounce down. Essentially, when you look at a long-term, again, 4-hour candle on this one, you're seeing kind of a pullback here. I don't think it's got enough of a button hook to say it's done. It's still over the 9-day. You got this gap down here at 307. In pre-market, it's at 383. It's down about 4%. His other one that he said is BBAI, and we've gone over this one as well. It's also seeing a pullback. This one's got a little bit more of a major pullback at 472. It's down 2% in the pre-market. This is an interesting one because they're helping hospitals, medical care facilities. Their pro models helps factories. They've got shipyards, and they've got a new contract with the Air Force. The purest AI play, Charlie said, and I trust his analysis, is AI. Most of us saw the CEO on CNBC. None of us were really impressed with him. I was kind of lukewarm on him. They do have a significant amount of contracts with companies, though. And this is probably the biggest AI play if you want to play AI. They've got a March product release that could be an enormous catalyst on this one that could push them back up to 30. Right now, I'm seeing that button hook. My guess is that you'll get back below 20 once this hype kind of gets down, or the Fed kind of says, we're going to stay at a long time. Veri, VERI, is another one. That has run up from 543 to 849. You're seeing that button hook on the 4-hour. I wouldn't buy into any of these. Honest to God, I wouldn't buy into any of these right now. It's a Friday. Hold your money. Bet on the Chiefs this weekend. It's a better play. Mark is the next one. So there's your 6 that of Charlie's that he really wanted to look at. Bank of America. In their analysis, they do a quarterly analysis of consumers' spending and savings habits. They're spending more in January. And they said the lower end of the economic spectrum still has about 50% more in their savings account than they did pre-pandemic. So it would take a significant amount of time to get that quote unquote out of the system. Bank of America stock, you're seeing the button hook here at 35. It got you in at 34. We're running all the way from 31. I said, hey, when it dips under 30, I'll probably buy it. My guess is that when it hits the 200-day at about 34, that's probably when I'm getting into this. It's just too strong of a momentum. I think financials actually move. Their earnings have already come out. The next catalyst is the ex-dividend date on March 2nd. But Bank of America saying that people still have money and people are still spending probably just pushes the Fed to actually be a little bit more aggressive. So my take on this one. Goldman Sachs announced that their estimate for this year is that oil will average about $80 a barrel. It's at $80 a barrel right now. The administration wants it lower. Most governments want it lower. Russia announced today oil is fairly strong. If you look at UCO, Russia announced they will be reducing their production by 500,000 barrels. UCO on our 4-hour algorithm has a buy-in here at 28.79. In pre-market, you're at 29.03. So you've got a fairly decent RSI here. You got a MACD cross up under the oscillator line. oil's just been, I mean, I've hated the energy trade for this year. Well, I shouldn't say, I still love the energy trade. It just hasn't done anything. I mean, natural gas is going down. Oil stocks haven't done much, blah, blah, blah. I made a mistake. The G in ChatGPT does not stand for Google. It actually stands for generative. ChatGPT stands for Chat Generative Pre-trained Transformer. It does not stand for Google. So I got some bad information. I passed it along. Somebody on Twitter scolded me, and I say scolded in a very nice and loving way. But I'm glad they didn't go all internet vampire. Oh my God, what an idiot kind of thing. I'm better than you kind of stuff. No, he just said, hey, good analysis of it. It does use Google's API. So it's using Google for its training, but it doesn't stand for Google. I was kind of shocked on that one. Sherry, our queen legend on YouTube, wants me to look at RGTI. This is a computing company. It's a hype rally. And I said, Sherry, is this a hype rally? She said, of course. Our 4-hour algorithm has you buy in at 87 cents. Right now, you're at $1.10 in pre-market. Yeah, it's $1.10 pre-market. On our 65-minute algorithm, it looks like, are you in on this one? You've had a pretty good pullback. You're getting out of an 8% gain, and $1.11 right now is where it's at, but you haven't had a cross up here. The MACD is crossing down. The RSI is at 40. So it might be getting ready to move again. I would probably be looking at this 50-day as a stop loss point. If it gets under there because that move was so violent, again, you had a golden cross back here on January 23rd, which didn't exactly move the stock positive. You had a death cross shortly after January 3rd after a couple of losing trades on this. But after you got the 50-day down below the 200-day, it immediately moved up. And you had a great move. Now, the reason it moved up, you got this volume. You got these volume spikes. And again, these are 65-minute candles. This is not the 4-hour. These are 65-minute candles. But the MACD violently moved down. And you're seeing it kind of put in a floor. If you buy at 110, I would probably put in a stop loss at about $1. Lose 10% on the way down. I would say 140 is probably where you're looking at it going. If you buy at 115, 110 and you get to 140, take profits. Don't be greedy. Today it would be a big move to get up that high, in my opinion, though. But it's been done before. So again, this is a 65-minute algorithm. Scans. I'll go over scans. And these are ones that I'll tell you, it's a Friday. I typically don't like buying on Friday. Boeing. And the reason Boeing gets in here is because it's on our core buy list. And I think you can use it as an entry. I'd like you closer to $200. And I do think that the market has some pullback in it. But if you wanted to get in, it did have a cross up here. You're getting out of a 58% gain run. It's getting you back in at 1214.46. But that's Boeing. It's trading at 212. I would say closer to the 200 mark. I think there is some justification here for it going down to about 191 with a volume shelf level support. But between 191 and 200, there's really no support. So if you get closer to 200, just expect if it breaks that 200, it'll go down to 190. But in my mind, I think this company reinstates the dividend sometime next year. It's a good buy and hold because the reason I have this in my core portfolio is because we're still at just COVID levels. Now, the dividend was cut around this time where you see these gaps back here, but you're still on a weekly. You're still below that 200-day. You're still above the 9-day on this. And you've got this gap up here between 402 and 416. At some point in probably the next few years, you're doubling your money at 402. When the dividend gets reinstated, you're probably up here at 340, 350. It's just my take. Hilton crossed up. And the reason I'm bringing this one up is because it is on my personal watch list. It's not on our core portfolio because I just don't believe in it that much. But travel stocks, I think you can trade. And this one, it crossed up, and it's a secondary crossed up based on their earnings. But it's a strong move. December 30th, you bought this at 125. You're at 150 right now. Your ex-dividend date is February 27th. But HLT already moved. It's got a secondary cross-up. The RSI is high. If you want to get in, you can get in. Just beware, it's high. But if you wanted a travel name, I like Hilton. Coterra, which is a natural gas and natural gas play. This has a cross-up at 24.37. The last couple of times have been losses. Just be aware, natural gas, in my opinion, still has a ways to go down. You could play this for a pop. Their earnings are coming up February 22nd. I would be wary of it just because their natural gas, I believe this was the one that was the majority of, it's got a big dividend. It's got a 10.32% dividend. A lot of the initiated targets are around 28. You're trading at 24. So your high point on this one is not super high. This is a company that has both oil and gas in their thing. So I think they have a majority of oil, not gas, but I don't know it very well. Coterra is one. Another one that crossed up is VOC. This one just has a huge, huge dividend. The dividend was just paid. It was a 2% dividend on this stock, and it went from $10 down to $8. The reason I'm bringing this up is the RSI is down here at 37. Understand, the catalyst for this one is gone. The dividend of 10% has, 10% annual has been paid. Do your due diligence. It's not over. It's 9 days. So do I think that it's done going down? I have no idea. I see these dollars back here in September at $6. That was when natural gas was playing, good. Oil was good back then, but you've ridden it all the way from $6 to $12 here in January. So if you bought in here in September and just said, I like this one, if you played it, you made 20%, you did your thing. But if you pulled back or just getting under the 200-day, it crossed up. I kind of like it. But I'm not buying anything on a Friday. Just be aware. MVO is another oil trust. This one is using the 200-day as its support level, it seems. But it did just have a violent move down. It just got you out with a 15% gain on February 1st. And that was a buy-in at $13.23. I see this. Hold on, I'm going to press pause. Okay. Hey. 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 Yeah. Brian, I thought you did Alcoa, but I'll look at American Airlines for you secondarily. But I thought you did Alcoa. Hey! Because the symbol for American Airlines is AAL. But I'll do Alcoa. I'm just waiting for my dogs to calm down. Daisy? Be good. Okay. Sorry, dogs barked. I had to get off. MVO, EQT also crossed up. And I think I went over this one yesterday, but EQT crossed up, and the dollar on EQT cross up is $30.50. So if you want to play this one, it's in a downward trend. Just understand this one is natural gas. And I don't think natural gas is done going down. But if you want to play that one, their earnings are coming up next week, February 15th. The ex-dividend date is shortly after that, February 17th. So EQT Corporation. Probably a good one. Let's go over some of our recaps. This week was a down week. SDOW on Monday. We said, hey, SDOW might be a good buy on Monday. Got you in at 25.53. You're kind of sideways. 25.69 is where you're trading today. So you haven't lost money, but if you got in on Monday, again, this is a ultra short. I don't know that I'd necessarily hold on to it over the weekend because you're just kind of praying that nothing happens over the weekend. JP Morgan on Monday. This one got you in at 139.40. You got all the way up to 143, but you kind of pulled back here late in the week. I think you're seeing that button hook. If this is a long-term trade, again, like I said, you're buying in at kind of high rates. I would probably wait to get you back near the 130 to 128 realm. They don't have a catalyst. They've already had their earnings. Their RSI is down at 43. I don't know that, I'd necessarily hold on to this one. If it was a short-term trade, I'd probably get out with some type of profits if you could. Again, that's if it's a short-term trade. SPG, we talked about earnings on this one. They were decent, but it got you out of this trade. I like this one. I tend to hold this one. I don't currently hold it. I do trade this one. I had sold out before their earnings on this one back in December just to take some profits. So, but I like Simon Property Group. I do. They have a 6 or 8% dividend as well. SARK on Tuesday, it was one of our buys, and we said, hey, buy this one. 39.24. You're trading at 41.68 right now. So pretty good move. I mean, almost 10% in SARK. Not bad. SPXU, which is a ultra pro short of the S&P 500. The algorithm got you in at 1378. You're at 1411. Not bad. Not horrible. Not bad. Again, it's been kind of a down week, so these triple levered ETFs are actually working on the downside. SDS on Tuesday, it got you in at $40.34. You're at 4103. Not, maybe 2%. Not bad. Again, I wouldn't necessarily hold it over the weekend. KHC, Kraft Heinz Corporation, on Tuesday. I said this is not one that you necessarily trade. This is one that you probably get into. I said, hey, it's kind of moving sideways. I don't like it. It's above its 200-day. Probably wait till it gets down. Got you in, got you out right afterwards. So you're still out. The MACD's down, but this wasn't a great trade. Hopefully I didn't lead you in there. If you are holding it, I don't think it's a horrible hold. I think you're fine. Wednesday, we had a bunch. I mean, Merck was a big one. NVIDIA was a big one. Let's see where Merck got you in. 105.81 and you're 107. I said it was bouncing off this 200-day at 104. I think you were fine buying at 105. You haven't lost money. NVIDIA, we said, hey, this one has moved a lot. Be extra careful. And on Wednesday, it was trading at 222. You're at 215. The only reason I brought it up is because that move is just huge. I'd like you to get into this one under 200. I believe that I did warn you about that one. Wells Fargo, I said, I am in this one. This was a secondary cross-up. You're seeing that button hook. Hasn't gotten you out. On Tuesday, you were trading about $48. It looks like $48.43 was the high. Again, it was a secondary cross-up, but I'm seeing that button hook and I'm seeing that turn down. I might get out of this one. Honestly, I might get out of this one today at about 47. I'm in down here at 41. It's a nice gain. I thought it was going to be long-term. I might get out, buy on a pullback down here, more towards the 200-day at about 45. But I might get out of that one. LICY, this is Lithium Americas Corporation, had a cross-up. This cross-up was a secondary cross-up. We saw some gaps. On February 8th, you were selling at about 26.64. You're 10% down at about 24. So I said it was a secondary cross-up. Didn't like how high it was. It's moved all the way from 18 in December, so I thought it had its move already, but I wanted to bring it up. VUG, which is the growth Vanguard, I said, hey, it crossed up. It's a secondary cross up. It's kind of moving down. Kind of same thing. You can listen to Tuesday if you want. There's quite a bit of these that to go over, but I don't think I need to go over them. You can just listen to Wednesday's show if you want. Okay, that's it. I will be back on Monday. You guys have a great weekend. I will probably post, and I know I promised this, but I will probably post the TrendSpider video as a podcast just because a lot more people listen to the podcast than they do listen on YouTube and stuff. But I'm going to go read the YouTube comments. If you're on YouTube, hit the thumbs up button. If you are listening and you made it this far, make sure that you just subscribe on YouTube. All I ask, you can hit the 5 stars on Spotify. You can hit the 5 stars on Apple, whichever one you listen on, because those are the main 2 that people listen on. Just hit the 5 stars. If you've made it this far, just go over to YouTube and subscribe. I don't care if you ever watch me on YouTube. Just go over there. I think you'd get a lot out of the charts that I show on YouTube, but go over there and look. So I'm not going to make this a drawn out thing, but thank you. If you want to join the private Facebook group, below my on the Twitter, on the link tree, there is a link, a Facebook logo. You can click that, join our private Facebook group where we have discussions about stocks and things of that sort. So if I taught you anything, you can tip me. You can always tip me if you want. Throw some money my way. I always appreciate it. I am not a guy that charges you. I am a guy that's trying to teach you how to build your own system to trade stocks. So those are my thoughts. Have a great weekend. Okay, export song to disk. I was not happy with that podcast, but I'm going to go back and look at your messages. Boy, there was a lot of chatter here. John, natural gas is, it is seasonal for the most part because it's a commodity. And we had a warm winter. What you're going to see though is Europe will need to replenish their storage. So if February continues to be warm, it could be good, but they use natural gas all the way through March in Europe. They're much more northern than a lot of people in the United States. I think Italy, if you think of Southern Europe, Italy is on the same longitude as New York. So you can think of how far north they are. But it is seasonal, and natural gas, sorry, it's just not going anywhere. AVRO is my fun money. What's AVRO? Is this a AVRO? Avrobio. Oof. That's some pretty good fucking fun money if you bought in at, these levels down here. If you bought up here, John, shame on you. VPLM. Let's look. And I'm just going down the list. Wow, VPLM. Great trade, Cherry. Oh, thanks, James. AI Gary. Larry! COVA. Yeah, John, I'm with you. I just Perry, Lyft. I went over Lyft. Here's my thought on Lyft. I always say any reaction in the market is an overreaction. And they're opening down here. I mean, they're at 1047 right now. Look at that volume. The volume spike is enormous. Everybody's selling though. I mean, it's just the RSI is down at 19. Again, any reaction in the market is an overreaction. The problem is Lyft and Uber are in a battle. And Uber is by far winning. And Lyft is waving the white flag. You can see they made 10 cents and then they lose 76 cents per share. That to me, waving the white flag. If you use Lyft over Uber and you like Lyft, think about investing in the stock. I have the Uber app on my phone. I don't have the Lyft app on my phone. So, and their earnings were super disappointing. So I I would take Karen Feinerman has a 3-day rule where after earnings she won't buy or sell anything for 3 days. I think this one is a perfect eye for a 3-day rule. You can see our algorithm got you in here at 1071 back in December. You almost doubled your money. And I said going into yesterday's earnings, it's not worth holding. Uber's earnings were really good. I said you're risking that's already priced in to Lyft, and then they just disappointed. So, Brian, American Airlines, I did Alcoa because you put in your comment. Oh, you did say American Airlines. I thought you put the AA, but hold on, I'll be right back. I'm gonna look at that for you though. Brian, I swear I'll do it. I'll do it for you. I should turn on the live camera so you can see the girls. American Airlines. So here, you bought during the pandemic at 10. You're at 16. So you've gained 60%. I don't hold airlines. It's just my take, Brian. I don't hold airlines. They constantly lose money. And even, you trade airlines in my mind. I would probably get out. Let's see. You said I bought 8 shares of American Airlines at 1081 during the close of the pandemic. American Airlines do not have dividend. Is it worth holding? Here's the American Airlines chart. Got you in about 13. It will probably get you out here. Again, is the difference? Are you holding on to hold on to 17? I don't think so. I mean, airlines, they're packed. They're doing well. Your 52-week high is 21. You're 23% below that. Your 52-week low is 11. I think you've developed this channel here. If you just look at, this is a daily chart on FinViz. And if you just look here, my eyes go to, okay, I've got an $18 probably cap. Between 750 and 18 is probably where my cap is of hitting. Now, if they continue on with great fundamentals, blah, 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 but say we have another round of COVID or something else happens, or, one of their hubs shuts down, or we have another holiday issue like we had over the holidays. I mean, you're back down here at 14. I think you take some of your profits off. If you like the airline, I'd hold it, but I think you're coming back down to this 200-day at 14 at some point in time in the near future. That's my take on it. Cisco. I'll look at Cisco. Cisco's one. It's a safe bet. It's not horrible, but to actually analyze Cisco, I will go back to a monthly because I want to take you back to the .com days. This was when Cisco was building the internet. This is June of 2020. You're trading at $69 a share at the high. Okay? You're at $46 today. You could come back, go there. You've seen kind of when you bottomed out here at $9. You kind of came back. Nothing crazy, but you made your move. You're above your 200-day, well above your 200-day right now. Moving in more short-term on the algorithm. Yeah, you're above your 200-day. I mean, the algorithm has you out with a 1% loss right here. It's kind of moving down. My take on Cisco when you go and look at FinViz is that it's in this trading range. And the 52-week range is probably the best indication of the trading range, 38 to 57. Now, I would probably shrink that down to between 40 and 50, 45 and 50. You're trading at 46. I think you're on the lower end. Would I get in there and think that you could hit 50 by the end of the year? I think if they continue on the path, you could hit 50. In the meantime, you got a 3.25% dividend. The last monkey equal to overweight. I mean, you can see the price targets from last year in August, 48, 59, 47, 48. The average price target is 54. So I don't think it's crazy to think that it gets back to 50, but you're probably going to sit there and hold it. If you believe in Cisco and you believe that the server side of the business is that good, go ahead. I don't know that you get down here below 40 ever again, like in the near term. You'd have to have a pretty big fall off there. Yeah, Tesla. Morning, Dawson. Tesla, where are we at on Tesla? Let's look. It's in the core portfolio. You're at 262. I think you have to look at the closing, not necessarily at just losing it. I think you have to look at the closing. I particularly look at the closing of this candle. If you close below that 200, you're breaking that 9-day. Doesn't mean that, death is in, but we haven't been above the 200-day since September of last year, where it was trading at, September 2022, not last year. Oh, yeah, that is last year. At 281, you were trading. And then it just went into this slide late in the year. This was Elon buying. This was Elon selling. That 100% is Elon selling for Twitter. And once he said he's done, it kind of moved back up. That's why I think this gap up here, 257 to 260, is in play. But if you close, I think you pull back to probably this gap at about 150. There's my take on Tesla. RGTI. Did RGTI go up on the open? I think I said that it could pop on the open. Let's see. I'm on Active Trader Pro. RGTI lost all of its confirmation. RGTI so far does not have the volume. I might go to a 5-day just to see the volume spikes. I don't know, Sherry. Doesn't look good. The $800 loss I've already made up. I mean, I've made it up in my long term. My long term is way up. So, okay, John's out of here. So I bought some stock, but it was like, yeah, Brian, if you started during the pandemic, I mean, look at FinViz. FinViz is the Bible. Any true investor, I mean, I can tell you probably Warren Buffett looks at FinViz if he ever gets on the internet, which he probably doesn't. Dalio, all those great investors, they have their Bloomberg terminals, but the actual common man Bloomberg terminal is FinViz. And it gives you all of the information that you need on a particular stock. Use it. Understand the heat map here of the S&P 500 and others. Understand insider trading. I would go through FinViz and just look. And if you go to a company, my favorite company is Apple. And if you go to a company and look at it, this block right here this is your Bible. This is, hey, am I investing in a company that makes money? Am I investing in a company that has money? Am I investing in a company that has good fundamentals, the number of employees, the dividend that they're paying? Look up and you can hover over this and you can look at this and then go to Investopedia.com if you don't know what it means. Like earnings per share over 5 years, you can go to Investopedia.com and just look at what that should be. ROE, return on equity. You can look at ROI. And if you just use Google, Investopedia, and FinViz and do a little bit of work, it's not much work. You can kind of, make yourself aware of this. You look at the insider sales here. They're all selling at 158, 155, 142, and these are big dollar amounts. I mean, this senior vice president just sold $25 million worth of shares at 142. In August when it was trading at 174 and 164, these people sold $4 and $16 million. That's big money. Now, overall, they're not selling a whole hell of a lot of shares. They're probably doing it to diversify themselves a little bit because they get awarded most of these insiders. When you look at their actual titles, they are getting allocated shares and RSUs, restricted stock awards, RSAs. So restrictive stock units, I should say. Oh, my Active Trader Pro just crashed. But I do think that, you if you're just new to this, you probably have a little bit to learn. Oh, I wasn't even on Safari. A little bit to learn, but this is the block that I was talking about. You want to be on this block. FinViz is your friend. And if you want to, do what Sherry does, you can look at investing.com and look at the pre-market and look at the big movers. I want to see what SQL did after opening, because I think it pulled back a little bit if I remember where it was. But I need to sign into Active Trader Pro again, and then I've got to upload the podcast because I'm going to get out of here and I'm going to walk 10 miles today. Your boy did 12 yesterday on a hike. So, okay, where is time to refill my prescription? Submit. Close. Am I crashing again, or is it going to start? Oh, is it going to start? No. Yes, it is. Woo, it's just going to be slow. I'm going to go to GarageBand. Quick GarageBand. Anchor. Brian, man, don't be afraid. I mean, one thing that you'll have to learn with investing, and if you're new to my podcast, I advocate a 40-40-20 portfolio layout. And so the first 40% is you just buy and hold. That's my Apple, that's my Google, that's my Amazon, that's my VOO. That's my core portfolio that I have split out with a bunch of things. And I just buy and hold. And on opportunities to get in, I buy it. On opportunities that get out, I may trim on long-term capital gains. So I hold it well over a year. On the other 40%, I usually reevaluate that once every 3, 4, maybe 6 months, maybe a year. I kind of look at it when I can. And I do have TrendSpider, so I have an algorithm set up with my core portfolio, with my entire portfolio. So I do get alerts on when things are really moving, but I try and keep the overall, all of this, the total stock, to about between 20 and 25 investments. It just gets overwhelming, and we all have lives outside of freaking investing. You can't have, if you have more, it just gets way too much, in my opinion. If you can process more, great, have at it. But I think the average person, probably 20 investments, including ETFs. And again, if you want a company, maybe you don't want to buy Apple and Amazon and Facebook and things of that sort. Just buy the Qs. Q. But the 20%, so that you're 80%, there's two 40%, and then 20%, that's the shit that you're trading. That's the shit that you and I that half the people that log on here, that's the shit that they all ask about. You shouldn't have more than 20% of your portfolio being traded on a daily, weekly, or monthly basis. You just shouldn't. There has been more wealth built on buy and hold than trading. More people's accounts have been blown up based on trading than they have for anything else. I don't have a jiu-jitsu gym. I wish I did. By the way, I made mention, Ricky and Charlie are using all fear tactics. Very similar to what I see in politics. We're going to make you afraid to trade unless you listen to us. And if you don't know who Ricky and Charlie are, look up Zip Trader U and Ricky Gonzalez, I think his name is. But scans. There we go. I've got. Okay, I should be able to get the. Brian, man, I'm old. I'm a boomer. I gotta walk. Gotta make sure my body is at its peak. To be able to grow old gracefully. Okay, let's see. What else did I believe in? Weekly recap. Update 2/10 22 23. It's 23. Oof. Let me just. I'm going to copy all of these. Publish now. Bum. Okay, let's see. Solana. IQ. Stellantis. TQQQ. SQQQ. We're going to, you know what? I'm going to cut all this out. And I'm going to put SPY. I hate that Anchor does this. Bum, 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 bum. Have a great weekend, Sherry. I will see you on Monday. And we can make that $800 back on maybe a little bit more comfortable trade for the boomer here. But I think this weekend I'm going to try and put the day trading strategies into TrendSpider that they recommend. RGTI. Hilton. EQT. Recap. And we're going to get these out of here. And we'll tweet. And then another one. And we'll tweet. And we'll do SPY. Tesla. HPCO. Ford, CS, Amazon, Lumen, Affirm, Boyle, AAPL, SOFI, AMD, Disney, UVixi. UVixi is up. Uber, Intel at 27, QT, MS, Microsoft. We'll just put those in. Fuck it, 4 left. Oh well. Okay, I got my. Boy, this sucks. I don't know why that does that. Dashboard. Hey, Brian. Have a great weekend, Brian. Take care. Okay. Anybody else have any questions? I am probably, and jiu-jitsu, I wish I could do jiu-jitsu, but let's see. Wah, wah, wah. Hey, Brandon. Yeah, I'll look at it. Give me 1 second to make sure. No thanks. Nope. Oh, come on. L. Stevenor. Stevenor. You know, Hung, I've let that one slip. I've been meaning to do one on the way I decide on purchases and things. Um, let me see. I'll do one. Hung, it's Super Bowl weekend. Let me just AXP. Hold on. Let me look at AXP. I have to get over to. Marley is messaging me on Facebook. I was going to, hold on, I was going to do this for Larry. Mlgo. I'll leave that as A. Okay. Let's go and look at AXP. This is American Express. Great trade to get into prior to earnings. Ever since earnings, you can see the trade down at 176. I'll go over to Safari and AXP. So here's my take on AXP. I think it's a great company to buy and to hold. You got this gap between 165 and 156. They have a super, super strong forecast. I just think that the market gets taken back a little bit. And my take on it is you're probably going to see this get filled, if not close to it. And so I don't want to say that this is a horrible entry point, because I don't think that it is. You are running 11% below your 52-week high of 199. I would think that this support at 165 right there, you can see kind of how it bounced off there a couple of times. I mean, that's only 170 back in June of last year. And then in August, it kind of bounced off there. It almost made it up there in January. And then kind of, in December, late December, sold off. And then in January, you kind of saw this just floundering about 155. Great trade. Like I said, before earnings, great trade, but you gapped up. I just can't imagine that it holds something above. If I look at a weekly candle on this one, and I'm using FinViz just because you guys can all use FinViz, I can't imagine that we get back to these highs. That was January of last year, January and February of last year. They had just started to raise. There was the assumption that we were still in a strong economy, but we were going to weaken, but American Express shouldn't weaken. Boom, you kind of went down. Now, if we go back here, and the algorithm will probably get you out, not anytime soon, but on a pullback it will. The moving averages need to move down for my algorithm to get you out. But if you look at a weekly chart here, this is probably a better look at American Express. The 200-day is about 130. You've only broken the 200-day during COVID. Even these lows in October, you barely touched the 200-day. So if you were to look at basically, let's go from, should I do COVID low? Here. We'll do that. And we'll go to these points. And we'll assume that the October lows, we'll assume the October lows are the lows. So if you look at that, and then we assume that the COVID highs will go here. I think you touch about 3 points there. So take a look at that. If you assume this is the channel that we trade in, and again, that's COVID lows, you're not getting back to that. That's a crazy one. You can assume that 177 is not a bad price point to buy into. But remember, this is a 3-year period. So for 3 to 5 years, you're probably doing fine buying here. I'd probably wait for the 160s. That's my take on it, Brandon. My parents sent me to a typing class when I was a kid. So, you beat your parents up at the time where they're like, I don't need to type, Mom. My parents were pretty forward thinkers. So, okay. That is it I am going to hang up for today. If you guys have any questions, hit me up on one of the socials. And Brandon, I hate to nickel and dime that one, but I do think that's a long-term play. So like I said, I don't think it's a crazy thing to buy in at 177. But I do think you're punting up against those highs. If you think that we're continuing into highs, go and get it. I think American Express, look at American Express, 18 PE. Go to Visa, you have a 32 PE. Go to MasterCard, and they have a 36 PE. American Express it's a better quality customer. I don't think that you're crazy for buying into that. Let's see what American Express monkeys say. Just so I think 186 is the latest price target. That's not even reaching the 52-week highs. January 5th, they downgraded this to 134. Stevens did. What morons are they? Piper Sandler in December said 159. You're way past that. You've got a buy here from a director. It's only 1,000 shares, but he bought at 149. These guys at 154. The guy sold a bunch of shares. 154 he sold. So again, this guy sold at 178, the chairman. $8 million worth. That was April. So I don't, there's nothing that tells me that it's crazy to buy in here. Year to date, though, you're up 19%. So I do think that, I'm not necessarily looking to buy a lot before February 15th, which I've said, I think it's just February 15th is the mark that I'm hearing that people think we will kind of take a significant leg down. I don't know if that's true. Again, nobody knows about the market, but it's kind of what I'm hearing. So, okay. Let me know if you guys have any questions. Have a great weekend. I will see you guys later. And Hung, I promise I'll try. I just get lazy, dude.